Greetings, Algo artisans. Today we take a look at a strategy that can make a trader $8,500 in 1 month. We're going to jump into the charts right now. Quick reminder, nothing that we say here is to be used or construed as investment advice. Please talk to your licensed investment advisor before risking your money on markets because you can lose money. It's dangerous. All right, let's get into it. Okay, so the indicator used, you can see it at the bottom of the screen. It's called the MACD, Moving Average Convergence Divergence. The blue line and the orange line are the moving averages. We did a video prior on moving averages, and these do work in pretty much the same way. And the lines you see, these bars, these are actually the distance between the two lines. So this histogram is basically between here and here, that little yellow line that I just drew. If you take that and you move it down, it'll see it's the exact same length as that bar below it. So that is how the histogram works. And it's just a graphic readout of that distance. It just makes it easier to see the trends. Now, the way that MACD works is that when the blue crosses below the orange, that is a bearish scenario. When the blue crosses above the orange, that's a bullish scenario. Now, when these lines are above the zero line, which is this yellow line that I've put here, which is right where these histogram flips from red tones to green tones, that's also a bullish scenario. The opposite is true when it goes below. That becomes a bearish scenario. So the way that this particular methodology works is that we enter right as those lines cross, and we only go long if they cross below the zero line, and we go short if they cross above the zero line. So our long entry is going to be the candle after that cross that we'll enter when that cross is done. For the sake of this demonstration, we're going to have a 1-to-1 risk to reward ratio where the stop loss is below the structure and the take profit is at 1 exact unit from that, meaning the exact same risk to reward. So if I risked $100, then I made $100. This trade is going to be the same, where here is the cross. It's above the zero line. That means we go short, and we enter the candle afterwards at the beginning of that candle. Stop loss above the structure. Take profit 1-to-1 down. You can see the risk to reward ratio in the center right there. And this is also a winning trade as price takes profit right here, right before it bounces back up. Now, not all of these work, right? No method works every time. But the idea is, first of all, that you find a method that works most of the time. Secondly, ideally, you can actually have a risk to reward that is greater than 1. For example, this first trade, if I made this 2-to-1, this trade would work out. If I had it as a 2-to-1, eventually it would take profit. It would stay above this stop loss area and continue until it made its way up. So in this case, I would risk $100 to make $200. That means that when I win twice as much. Now in the actual backtest, I risked $500 and had all my risk to rewards at 2-to-1, and you will see that I lose a fair amount of trades. However, I'm able to win enough trades and win twice as much when I win them to make up the difference. So let's see how this goes. We have a win here, 1,000, lots of wins, right? Now there is an additional rule that I do have to describe before we get too much farther into this backtest. It's a rule that has to do with the way a lot of exchanges work, and it also has to do with the way the trends work. But if I'm in a long trade and I see a short signal, I cannot go short. I can go long again if I get another signal while I'm in a long trade, but I cannot go short. That's what you see with these blue lines. Those were short signals that I could not take, because with most exchanges, especially in the US, you'll just simply cancel out whatever trade you're in. They don't allow you to hedge. It is what it is. So in this case, what we have is 1,000, that's 4,000, 5,000. Now this trade didn't work out. I got stopped out. Same again. I lost 1,000 here, but remember, I'm winning twice as much as I am when I'm losing. So here we go. You got a couple losers here, and you'll notice it gets streaky. You'll have a lot of losers in a row, and you have a lot of winners in a row. But in the end, even though I've got 1, 2, 3, 4 trades in a row that I lose and 4 again that I lose, I'm still $3,000 in profit after 1 month. So how did I get $8,500 when I only got $3,000? It's because I applied filters. So let's take a look at that back test. Okay, so here we are, and the way I have it, you'll notice if you back out that all the greens and the reds are clustered. That means that I'm using a filter that is able to read the trend. Okay, now how did I do that? If you want to find out what my filter is, come to algofactory.tech. I'll show it to you. Now, I did keep the profit taking very simple, 2-to-1 on every one of these trades. There are other methods of taking profit and setting stop losses that can augment this and take it way past $8,500. And I do teach that over at algofactory.tech as well. But given that this is a trade that on the 30-minute chart found around 15 or 20 trades in a month, that's pretty excellent for just using MACD and then a filter on top of it. So here we go. We got a win here, 1,000, 3,000, 4, 5, 6,000 off the bat. Nice streaky wins. And then I lose one right there. So So 5,500, we got a win, couple losses, we got a win, loss, win. And again, the wins are always twice as much as the losses. So 2 wins is $2,000, 1 loss is 500, right? So in the end, I end up with $8,500, and that is excellent. Now I'm going to give you a little bit of a bonus, all right? Because obviously the way that this trade works, this has to do with these crosses, but there is another way to enter a trade and to add to the trade. So here comes bonus time. You can have an additional trade whenever you're in a trade and whenever the MACD actually crosses the 0 line. That's a very bullish moment if it actually crosses. Now you do have some times when that doesn't work out, especially during low volatility. If I were to go ahead and show you some crosses using this yellow line where we can add to the trade, we might have a chance to augment our numbers and go well past that. So this is just a little bit of the Cowboy secret sauce, understanding how MACD works, because you have a bullish cross. And as I said while I was explaining this indicator, when these lines cross, in particular that blue line, when that crosses that 0 line, that is also a bearish or a bullish moment. So what you're going to have to do though is to figure out how best to create that stop loss. Now you can create a stop loss and just have the same one as before, but have a 1-to-1 risk to reward ratio. That's one way to go about this. So in that case, you have the same stop as before, and then you just go 1-to-1. And in this case, you actually would not win that trade. You can have a bigger risk or a smaller risk. You'd almost win that trade, or you could somehow mitigate that. You could use different tools, and there are different tools that we use for stop losses in trading. So in this case, we couldn't take this one because we're in the middle of a short range. However, this is a short, and would this work? Let's see. It does look like it will work. So I enter after the cross. I'm going to clean this up a little bit. So the prior stop loss was right up here, right? And I'll delete that so we don't see it. Make it a little easier to see. I'm going to make this a 1-to-1 risk to reward ratio. And going out far enough, you'll notice that this does take profit, and it even goes beyond 1-to-1. So that's just another way to augment the trade. You just add on another trade when you see a cross that matches up with the trade that you're already in. For example, this trade right here is a perfect example. You have this trade, this big long box right here. That's actually not a winning trade, but when it crosses, so you lost $500 on that, but when it crosses right after that, you have the opportunity to enter another trade, because that was a 2-to-1. It didn't make it all the way to its take profit. However, if we enter right here, we have a similar stop loss above the structure, and we have it as a 1-to-1, we see it takes profit right there. So even if you only entered that $500, you lost right there, but you got that $500 back. So that's the little bonus ability that you can have with these trades. As a matter of fact, my filter right here, if I were to enter at this cross, even though there was no trade because it was a red filtered time, the filter actually turns green at this point because all the rest of these are green, and I studied this pretty hard. So with my filter being green, even though I didn't take that trade, this cross is now a possible trade to take. So I could take that trade, put that stop below the structure, and get my 1-to-1 and swipe out another $500. So that is the bonus, and that would take us well past 8,500, and some people even develop entire strategies around the bonus strategy. So here it is, $8,500 in a month, and again, this is based on risking $500 per trade. So when you lose 500. When you win 1,000. And the amount of money that one decides to risk on a trade should be subject to the size of their book, and ultimately it should be subject to how much money you're willing to lose. Because if you cannot afford to lose $5, you should not be trading $5, right? And again, this whole thing, none of it's investment advice. I'm just showing you a strategy that you have to go and test on your own to see if you like it and see if it works for you, and maybe use some filters, or maybe do some different type of stop loss setting or different profit taking. The way that you tweak this is going to determine if and how successful you are. I hope this was helpful. Come on over to algofactory.tech. I teach you more about how I do these things, give you a little bit more data. As a matter of fact, that's one of the things I do. That's the main thing we do. We teach people how to build these, and this is an algorithm. What I've shown you here, this is an algo, and we do have a lot of people who are actually pretty happy with their progress on algo building and their trading, and they're profitable. So let's hear from one of our customers right now who is very happy with their progress in their algo creation.
Hey guys, so I've been in Algo Factory for around 10 months now. I held crypto, but I hadn't traded crypto or Forex before. Since joining, I've learned a massive amount that I use almost daily for trading, reading charts, using indicators, and understanding different aspects of the market. So I found the course incredibly easy to follow, and the interactive style of teaching is incredibly beneficial. So now that I'm comfortable in my trading ability, I'm starting to invest more capital, and projections are looking very promising. My goal is to be trading full-time time in the future, which I believe is highly achievable. I've met an amazing community of like-minded people and made some great friends. In my opinion, both V and Cowboy go above and beyond, and I highly recommend joining Algo Factory. Thanks for everything, legends. Cheers.
All right, thanks for listening to that. Don't forget, come on over, algofactory.tech, trade your job, upgrade your life. We'll see you on the next one.